great. Well, Betty, thank you so much for joining us. We really appreciate it. It's not often when we get to hear from somebody in other countries, so thank you for joining us. The first question is, can you give the people a little bit about your background? Who are you, where are you, and what do you do?
Okay, who am I? I'm running the capital markets business for Colliers China. And what brings me to this position and to where I am, I guess it's a combination of a lot of things. Firstly, the professional experiences. My first time joining Colliers was way back then. It was back in 1992. And I started with retail before I decided to move into office. And this office leasing experiences brings me a lot of understanding of owner occupiers, of end users. And then I think, leasing did not satisfy me anymore. So I decided to also start working on investment, but that was back in the early days. And very shortly after I decided to do investment, Asian financial crisis hit us. So I didn't really had the chance to do a lot of things. And nevertheless, I realized that it has everything to do with capital. And obviously, it has also a lot of things to do with financing. Nobody doesn't do leverage if they want to do real estate financing. So I spent a few years working for banks, financiers, before I got the chance to come back to the real estate field and jump into investment. That really helped me a lot. So I came across with the understanding of the retail office market, with the understanding of the owner occupiers, as well as how to structure the capital, and then before I moved into investment. And then ever since then, that was back in 2007. So I've been in this investment position for the last almost 14 years now.
Right.
Don't guess how old I am. Please don't do that. Okay. I started my career really early without even knowing that I stepped into real estate.
You mentioned you've been through three major crises, and they happen every 12 years, right?
It happens every 12 years. If you count it, 1997, that was the Asian financial crisis. 2008, 2009, that was the global financial crisis. Mm-hmm. And then now, the pandemic. It's almost every 12 years.
Right. And just for additional context, you now oversee a staff of how many, and what's your transaction volume between your team?
I have a team size of about 30 plus across China, mainly in 5 offices or 5 cities. 6. Okay, 6 cities. Certainly will cover what everybody so-called the tier 1 cities. For investors who are familiar with China markets, you know that Beijing, Shanghai, Guangzhou, and Shenzhen, these are what we classify as tier 1 market. It's so much like your Toronto and Vancouver.
Right.
And or the like of the New York, San Francisco, Los Angeles, Seattle of the US.
Right.
And then we'll also have certain top tier provincial cities, which are also the active investment market. So we follow wherever our clients go.
Right. And then just final question, what about your transaction volume? How much business do you guys typically do on the investment side?
Of course, that number's up and down. I don't know how Canada classify, how you calculate your transaction volume. But China is so big, and again, like I said, the reason why we're in only 6 cities is because these are the cities that our clients are active.
Right.
So what we do is we track the transaction volume of those cities rather than everywhere.
Right.
And certainly we also make reference to the RCA analysis and statistics. But I rather talk about ranking. I'm
Okay.
very confident to say that Colliers for the last 15 years constantly maintain at the top three positions. And sometimes we're one, for a year or two, and then we may, take the second post and back to number one, or perhaps a bad year, we were probably at the third position, but we have always been the top three
Wow.
among the big five.
Right.
Are,
Yeah.
are there any
Yeah.
are there any
Yes.
Chinese national firms that compete against you guys, or is
Very
it predominantly?
little.
Okay.
Very little. If they are, I would say those might be the freelancers or a very small firm and doing deals by connections, by relationships, rather than like us with skill, with the knowledge and professionalism and expertise.
Right.
Gotcha.
Betty, so this is a real estate show, so we'll get into the real estate in a moment. First, it's May 12th. What's happening in China right now? Are you guys still on lockdown?
I will say we're pretty much back to normal. It's a great question to ask now, because just about more than a week ago, our capital, which is Beijing, has also relaxed their quarantine code. Okay. Nevertheless, it's not for international travelers, but for domestic travelers. So anywhere within China to travel to Beijing before the relax, it takes 14 days quarantine, hotel quarantine. Okay, not home quarantine. Okay.
Right.
And it was just relaxed about more than a week ago. And now people traveling between Shanghai to everywhere within China, the low risk zones doesn't require any quarantines anymore. And except for perhaps two provinces, which is Hubei, which everyone must be, if not familiar before, definitely familiar now.
Right.
Okay, that's Hubei province is where Wuhan is located, and Wuhan is actually a provincial city of Hubei. Another province is Heilongjiang, which you might not know, it's in the northeast corner of China. So other than these two provinces, so Beijing, you may say, is probably one of the last few cities that's being relaxed. So we're pretty much back to normal, and the business activities have come back. I think, I just read a survey for the foot traffic in our shopping malls over the May 1st holidays. By the way, we had 5 days holidays. It's a long weekend starting from May 1st to May 5th. So the foot traffic of the malls have been 70 to 80% recovered.
Wow.
Right.
Pretty good.
Yeah.
So I hope that gives you an idea of how we've been recovered.
Yeah, I was watching an interview of Elon Musk, and he was talking about how, they have all sorts of factories in China, and he mentioned, we've already seen it happen in China, and we know what's happening. And now we're looking at what's happening in North America. It's kind of like watching the same movie but in English.
That's a good quote.
Yeah.
That's a good quote.
Great analogy there.
Right. I think we'll be following your footsteps soon.
I think Canada relatively is in a much better shape in terms of how you control, how you put all the measures to make sure that it doesn't go out of control. So
Yeah.
I do have confidence in Canada, much more than US.
Oh yeah.
That's good. That's positive. I have a question about that later, but first I want to go into. Can you give us a little bit of an overview of like of each asset class, and can we start at retail and kind of go through how that was impacted by the virus in China, and then where it is now?
Well, I think let's talk about the casualties. I guess that's your question. Okay.
Yeah.
I really, when it comes to those, the impact or the impact on each and every different sectors, I usually like to quote them by comparing one to the others. I think
Right.
the most casualty would definitely be hotel.
Right.
Okay, definitely. But nevertheless, hotel has never been an investment product in China. Okay,
Hmm.
and given that we really have a lot of supplies, and for people who know China, they may know that over the last 20, 30 years, whenever we have a mixed-use land parcel that's being planted for the basic parameters by the government before they put the land on the market, they always say they want a five-star hotels, and and five-star hotels cannot be everywhere. And so hotel is a casualty, and shopping mall is a casualty. I
And Betty, sorry to interrupt. Did you start to see any sort of opportunities in hotels? Where was anybody buying hotels and converting them?
Yes, which thank you for the questions. Okay, so whenever there's a challenge, there's an opportunity. So hotel now, I do see that hotel then becomes an opportunity for rental apartment
Yeah.
investors to convert them from hotel into apartments. And bear in mind that China doesn't have that market. Everyone knows that Chinese like to buy, especially
Right.
it comes to properties.
Right.
So, but for the last few years, in order to better control the residential market, we don't want the residential market becomes a bubble. The government has been putting a lot of measures along with how to provide a healthy supply. So the government encourage rental apartment, and clearly a hotel has been a great product to convert into rental apartment. Most of the hotel has got the infrastructure. Yeah, so that's what we see. And retail the same. I think yes, shopping mall has been a casualty, although over the long holiday, the foot traffic has been more than 70% recover. I do see that community retail becomes a great opportunity. Okay, it doesn't matter what, you still need to do grocery shopping.
Right.
Okay, and even if during the lockdown, the barber shops, the hair salon doesn't open, but once it's open, it's packed.
Yeah.
Everybody needs a haircut. Okay,
Oh yeah.
Yeah.
you don't want your wife, your husband to to try to do a haircut for you.
I'm a casualty of that situation.
Okay. Oh, you
Yeah.
look great. You look
Oh.
fine. You don't look
Yeah.
like a casualty at
Yeah.
all.
Oh, thank you.
She must be doing a good job. Um,
Well, okay.
so I think now for retail, community retail is definitely an opportunity, and these are what I call the post COVID-19 implications. I think the community retail does provide all the fundamentals, things that you need. Okay, pet shop, barber shop, hair
Right.
salon, kids
Did,
education, supermarkets. These are the things that have always been in the community retail, and
And
they are sustained.
On that front, Betty, in terms of retail, do you see any spike in vacancy because of lost businesses, or has the
Yes.
majority of businesses wrote it
Yes,
out?
for sure. Yes, for sure. That's very similar to office. I think now once we talk about retail, let's touch on office. So let's use office as a comparable. Certainly, you will have large tenants. Okay, in retail, these might be the ones, the chain stores, the fast fashion, who will be able to sustain through the low or no foot traffic, or even
Right.
the close down, the lockdown of the shopping mall. There will be also small tenants who just cannot survive anymore. And this happens not only in the retail, but also office. And
Right.
certainly, certainly all the tenants are trying to negotiate, have been, okay. I wouldn't say it's still going, and I wouldn't say but during that few months, a lot of tenants going back to their landlords for concessions.
Betty, just to jump back into the vacancy, what would the average vacancy pre-COVID be for, say, the office market in Shanghai? And what are you able to estimate or guesstimate effectively what it would
I do
be
have the
at the end of
number
this
in
quarter?
mind. I do have the number in mind. I actually compare, again, like I said, the 6 locations that my team are located. Again, let me remind you, Beijing, Shanghai, Guangzhou, Shenzhen, and Chengdu, and Xi'an. Okay. And interestingly, when we look at the number 8, the Q1 statistics, we didn't see really a lot of vacancy fluctuations. Generally, it's less than 1%. I would call that a structural change rather than and the actual change. And the rental performance was also flat. I don't want to use stable, but at least flat. If we compare, then if we do Q on Q, quote unquote comparison, I think, but it has a lot of things to do with seasonality. Q1 tends to be the quiet season for China. Not only because of the Christmas and New Year, we have Chinese New Year, which is usually it takes, it's 2 weeks holiday, and if you plus 1 week before and 1 week after, you pretty much have 1 month gone in Q1. Okay, so so Q1 tends to be a quiet season for China. And so I'd rather touch on the tenants' activities. We do believe that most of the tenants, if they had the plan to do relocation, they might consider to stay and renew the lease and renegotiate the rental with the landlords. And we also tend to believe that the landlords will want to keep all the tenants as much as they can, given you don't know what's going to happen with the demand and how fast you can find a replacement tenant if you let go them or one of them. Okay, so I think we will see more renewal instead of relocation for Q2. But we also believe that with the fast recovery, and also China being almost the first country that's stepping out of the COVID-19, the activities will be coming back from the second half of the year. And also, if you look at some of the forecasts by the different research institutes, I think I like to call Oxford Economics. I think for this year, Oxford Economics forecasted China's GDP growth will be less than 3%. The numbers change over the last 2 months, I think it has everything to do again with how fast we can fully recover. But for next year, that number is 8.5%. The
Right.
GDP growth. That's a big number. So
Right.
that definitely, and that gives a very strong signal of how we believe that the tenants' activities will be coming back from, again, the second half of the year.
Right. Right. Interesting. Betty, I want to do this quick because to give too much detail would maybe be an injustice because it's only been 2 months since the pandemic started. But that said, can we go by asset and just talk about maybe where cap rates were roughly and then where they are today?
Before we jump on that, I think we talk about hotel, retail, which touch on shopping malls, community retail, we touch on office. I think what I really want to highlight is this might be, some of the markets might be similar. We do see that, number one, business parks is a very stable market for its user profile.
Industrial leasing activities.
Industrial office, low-rise campus.
Right.
Okay, much larger floor plate, those type of things. Okay, giving that technology companies are definitely has got strong demand. Online servicing companies,
right.
and plus software firms, healthcare, pharmaceuticals. These are and telecommunications. These are the companies that instead might have been having positive growth out of the pandemic. Okay,
Right.
and secondly, that drives the logistic as well as the data center development.
Right.
Okay, especially in the continental market like China, Canada, and US.
Right.
Okay.
So in industrial, you're not expecting cap rates to change?
I don't. I think more and more investors will if they did not put that on spot, they definitely will take that will try to catch this opportunity. And
right.
Bear in mind that data center. We talk about business BCP. We talk about disaster recovery. If there wasn't the plan, this is definitely the plan. And we'll also talk about working from home. Imagine how you can work from home if you have a desktop instead of a laptop, and if you don't have a cloud computing rather than just the files saved on your desktop. I just cannot imagine how you work from home.
Right. Mm-hmm. Right. And then how about
so touch on the cap rate. Sorry.
Yeah. Yeah.
Touch on the cap rate. So I think for now, the good thing is for the transactions that was committed before end of last year, but only to close in the first quarter, we have seen almost all the transactions being closed without renegotiations.
Yeah.
Okay. And for this quarter, I think we might see a less active market, since it really takes few months for you to cook a deal, and it was literally no chance for you to do anything.
Right.
For the first quarter, you can't really travel for site inspections.
Right.
Okay, and that you can't really travel for due diligence.
Right.
Right. Nevertheless, I do think that we won't see yield compression anymore. Instead, I think we will see yield decompression for two reasons. Number one is definitely the risk premium. Okay. I think we all know that you need the return premium in order to mitigate your risk premium, right?
Right.
We're in the business. So that's first of all. And second of all, it has everything to do with the supply and demand. We had, if you look at the across four major markets, again, Beijing, Shanghai, Guangzhou, Shenzhen, we see that Shanghai and Shenzhen has got, this and next year are the supply peak for office. And then when it comes to supply peak, and suddenly the demands are not as strong and active as what is before the pandemic. Certainly, it takes longer to get to the stabilized occupancy and so on forth. So that I will see. I think your decompression will happen, and we were at about 4% for Grade A office.
4% Grade A office.
Yeah, 4% cap rate. We talk about cap rate. We tend to like to quote cap, which is the NOI yield. So I think for office, we might see across different cities, even though they're all tier 1 markets, we might see between 25 to 50 basis point decompression for the next 12 months.
Wow.
For retail, especially shopping malls, that may be a 50% basis point.
50 basis points. Wow. And what about multifamily? We haven't touched on multifamily yet. Like apartment buildings.
Apartment, it's hard to say because apartment, again, it's a new product in China. We're taking baby steps. It's not like U.S. and Canada, and especially U.S. where that product has been so sophisticated, and you also see a lot of REITs.
Right.
Okay, and so I think for rental apartment it will be stable. I don't think you will see any too many. You will see some change. I don't think we will see some changes.
Okay. Let's chat about, you have some Canadian investment groups active in China. Can you tell us about who those guys are and what they're up to?
On top of my head, I think Brookfield and CPPIB has been the two most active investors, Canadian investors, but they're very different. I'm sure you all know. Brookfield obviously has got very a lot of different capabilities built in house. They're a developer. They know how to do retail, office, and they are also very experienced fund managers. So I will call them the smart capital.
Right.
Okay, rather than just an investor. Okay. So they will tend to like to do mixed-use projects with retail being the anchor component. Okay,
right.
And then it's more of a mid to long-term investment, and but they have not really stepped into greenfield development so far in China. So that's Brookfield. And on the other hand, CPPIB, they're no different than any of the other pension funds.
Right.
They're definitely the limited partners behind a lot of the fund managers, but at the same time, they also like to partner with the fund managers to do co-investment.
Right.
Is there a lot of foreign investment into China? From, say, other countries outside of Canada, US, Europe?
I would say yes. I would say more of the US and the Asian. And if before, perhaps 5 to 6 years ago, we have a lot of US investors active. You name them. I can tell you what they have invested. Okay. Goldman Sachs, Morgan Stanley, Carlyle,
Blackstone.
they're all, yeah, Blackstone, BlackRock, they're all
Yeah.
there. But for the last 5 years, that landscape has been changed. We have seen more and more Asian capitals than the Western.
Do you think that's because of their administration?
No, not so much about that. Not so much about that. I think Asian capital were very close. Now, Asia is a very different market, in terms of business, and it's also very different in terms of, geography. If you look at, it's very dynamic. We're so many countries. We're not like North America. Okay,
Right.
it's pretty much Canada and U.S. That's
Right.
all. And we think about, Japan, Korea, China, Singapore, Malaysia, Thailand, Indonesia.
Right.
Just on top of my head, 7 already. India, sorry, I cannot miss them. Okay, so 8. So without talking about the rest of the others, we're already 8 countries. We're very different, and we are much more familiar with each other's market than if you need to come all the way from US and Europe or Canada, right? So I think it's very and plus I think domestic Chinese investors over the last 10 years have also being active. Before 10 years ago, I think the en bloc commercial real estate investments were dominated by the foreign capital. Morgan Stanley was one of the biggest. Okay.
Right.
But now if you look at that, Chinese capitals now, our insurance regulatory relaxed back in 2009 to allow insurance premium to invest into real estate. So that's about 10 years. Okay.
So the 2 questions: do you see any sort of deglobalization? Are
On
major
industrial.
on industrial? Is industrial manufacturing out of country going to slow down? And then number 2, kind of what are your broader predictions for COVID, the impact on the real estate market?
For the long term.
big
You
question.
just can't. Now this question, I just don't want to talk about any particular person, okay, or bring any particular name of the person.
Oh, what did they run?
No. I think the name is just out of there. But let's just not touch on that. Okay, let's keep it, within. Well, I certainly do not hope to see deglobalization. Okay, I think it's a demand and supply. We talk about our market. We talk about our own market. Okay, and real estate market. But if we look at different markets, and if we look at the entire global as one market, it has also sort of different demand and supply. It has the lower cost supply of labor, and it has the that can be the supply, which also a demand locally, giving those are the countries that really want to create a demand for job opportunities, right? So, and then there are the more developed market where they might have high cost of labor, which is not good for for their product, for their market, and that they are demand of spending,
Right.
and spending at a reasonable cost.
Right.
Okay. So if we look, I personally, I really don't want to see deglobalization. I think
I don't think anybody wants to see it.
Okay, but do we see that as a business contingency plan? Yes.
Okay.
Okay. we definitely see that as a business contingency plan, giving, I think, a lot of the factories over the last few months, they will panic. Okay, they know even if they want to go back to work, very shortly they will run a shortage of inventory of materials.
Right.
Okay, so and all of us, I think business contingency plan. Again, if we think the global supply chain works before the pandemic, we have to think about what happens if it doesn't. What happens if it lasts for more than 6 months or 12 months? How would I be able to still maintain the certain level of supply and goods?
Right.
So we will see, unfortunately or fortunately, I do see that happens. Nevertheless, it doesn't have to be to the extent that it's deglobalizations. You can diversify your locations.
Mm-hmm.
Okay, right? You can diversify your location, which I think a lot of business have been doing that over the last few years. China used to be the world factory and is still the world factory so far. But you do see that more and more manufacturing business are looking to diversify their manufacturing locations to Southeast Asian countries. Okay, and you do see them also moving some of the production lines back to their home countries. For example, U.S. And then, but then I also believe it has everything to do with, again, the supply chain. You can't just sustain yourself over there. Okay, you need a paper box. You need a lot of things in order to get your laptop shipped to the next city, even if it's just 1 hour from the factory. So you can't just relocate yourself, and it's a big engineering work to move at least if not let's just say firstly the last mile.
Mm-hmm.
Okay, at least you have to have those among you. If we're talking about the last mile of the manufacturing process before the goods delivered to the people like us.
Right.
Okay, and would that change the real estate landscape? Yes. We have had a lot of inquiries for industrial over Southeast East Asian countries, and try to understand the industrial landscape there, and certainly those manufacturing. Now, if they were to diversify or relocate, think about it. Office space, expat livings, retail spendings, and even before that, business hotels.
Right.
So that definitely changed the landscape.
Is there anything that you saw in China as the pandemic restrictions started easing off? Is there anything that you saw that surprised you within the real estate markets?
No, not really.
Well, you're too smart.
Not really. No, not really. I thought about it. Back in Feb, I know. I even before it became a global pandemic, I've thought about it. I'm sure I will get a lot of questions from our clients, and the way that I look at it is always, yes, we can talk about the impacts. We can talk about the negative impacts, which everybody knows. But
Right.
what are the opportunities?
Right.
I think that's the most important part of it. And if I cannot think of any opportunities, and being as long as in the in the market, then I think I will see a very standstill market with very minimal activities. But we have seen the activities coming back, and just for the last 1 week, my Beijing team has been so busy. We have a lot of investors flying from Shanghai and Guangzhou or Shenzhen up to Beijing once the quarantine code relaxed to see the market, to see the properties. So they have been running around and trying to manage their calendars. And we also have Beijing-based clients traveling to different markets. Again, Shanghai, Shenzhen, Guangzhou, to do the same. Okay. So I don't think I have seen any surprises so far.
Right. Where are the biggest opportunities?
First of all, I think that our clients will pay so much focus on the cash flow. Okay. If you know, just now we talk about the tenants walk away. Okay.
Right.
And just now we also talk about you might have to renegotiate it, the rental for renewal, everything. All these are the signs of less cash flow.
Mm-hmm.
So you really have to know how you manage your cash flow in a crisis. I'm sure they all have been doing that, but this is the time that you really have to be more cautious. You really have to do a better management. And then you really have to do cost saving while trying to bring everything up. Okay. And so that's what I have seen. Okay. That I think the post-COVID-19, there are certain post-COVID-19 impacts, but if I look at them again, yes, we can always look at the downside. But I would rather look at the upside. We learned, okay? And first, so cash flow. So the stabilized income producing is definitely something that's more of the appetite. And then we may have to revisit what means core, okay? And we might have to revisit how we classify all the different definitions of our investment products. Right. So I think those are also something that I am experiencing, and so I spend a lot of time to think, but also talking to all the friends in the industries. And then I think this is something we all have to learn, and we all have to go through. The good thing is we are seeing the activities coming back, and I hope that will be the same for your market. Okay. Once the lockdown, once it's reopened, rather than a standstill market. So, so that's I don't have a crystal ball, my dear. I hope I can give you better answer. Okay.
Yeah, that's a great answer.
I'm also learning through.
Yeah.
Okay. It's just like what Dama just said. It might be too early to ask the question, but we can do this another 3 months from now, and we will know. Right. So that's. I'm very optimistic. I think to do investment, you really have to be optimistic.
Us too. I think I'm hoping that in 3 months, when we get back on the phone, we can have a podcast that has nothing to do with COVID.
Yeah.
It's about the booming Chinese market.
Yeah. Yeah. Betty, we just hit the 1 hour mark. So, we've taken so much of your time and you've been very generous. So thank you so much. Over here,
Not at all.
it's 9 p.m. So
Okay.
over there, it's 9 a.m. and
Yes.
I'm sure you want to start your day. So
Yeah, definitely.
yeah. So thank you so much. Thank you so much for joining us. And we look forward to chatting again.
Yeah,
Thank you,
you have
Betty.
a good night.